part on the IoT, I think there's a huge possibility that is there for IoT to happen. I think all the three of them spoke about the capabilities of IoT. Steel talking to steel is a very interesting example. When that does happen, I think the whole part is that if you have a good omni-channel backend, you would be able to deal with IoT as an immediate next seamlessly.
Right. So I think it is really interesting at this stage. From all of you, I've heard a variety of potential use cases, whether it's application of blockchain for tokenizing transactions and assets of all types, right? From real estate to actually currency and making that happen. I think that's a big use case. I've heard a lot of applications around using AI and robotics for going after processes and activities that can be codified under an SOP, under a standard set of if-then-else kind of rules. There's also a lot of applications around decisions, particularly credit, and how do you ensure compliance and better decisions get taken through AI. Spoke about better fraud management, better surveillance, better detection. And IoT was really something where I heard that the user industry will start changing in the way they operate. And Abhay, you spoke about there are bank processes and there are also customer processes. And as customer processes change, there is pressure on the banks to then reflect that in the way they operate. So this is a sort of a really good compilation of what could change and what was likely changing. But Abhay, I'm going to be a little provocative with you. I'll take the liberty to do that.
Please.
The question I have is that there's a lot of great ideas, but this also sounds like a collage of ideas, right? And you use the word assembly line or an assembly of different technologies. Are we still in a phase where there is a solution in search of a problem to solve? Or is this really stuff that's happening? What percentage of your time you spend thinking and worrying about this?
Yeah. In fact, the sheer nature of my job, a very large part of my job is actually figuring out what's going to happen in the next 3 to 5 years. And
I really envy you.
Yeah. and let me just split it into two. Let's talk about the supply side and the demand side. Yeah. Supply more of inside out and demand more of outside in. From an outside in, it is very, very clear. Customers are going to have a fabulous time. Things will be cheaper, faster, more accurate, never erroneous. So there will be a huge demand for it. The real challenge is on the supply side is what do banks do to make sure this happens? Because customers will demand for it and some incumbents will struggle to deliver it. Some attackers will take a leap of faith and figure out how to deliver it. So I think the whole thing is not so much why and what. I think the bigger challenge is how do banks respond? Yeah? And I have 2-3 large streams of how it will possibly take care. The first one is that the immediate and the rapid ROI on all of these technologies is on operational efficiency. Yeah. So your back office, your compliance, your operational risks go down by a factor. There's a huge cost that bank incur. That will evaporate and that will get replaced. That will be the use case for establishing these technologies to start getting embedded. Yeah, that's how it starts. But very rapidly, it moves on to smarter decision making. Initially, I spent a lot of money figuring out what's going on. As and when IoT and artificial intelligence matures, you move up to what is the best I can do. What is the most optimal thing that I can do? What is going to happen next? So you have algorithms that start telling you whether this guy will pay your loans, whether this guy is likely to buy more products. Yeah, so whole experience seat of pants starts getting replaced with algorithms which are very, very accurate. Yeah, so that will be the next use case. You invest now, but you reap within 2 to 3 years. You start with operational efficiency, very soon get on to better decision making. But the final set will be that you are continuously optimizing, which means that at any point in time, there's no right or wrong answer. But over a series of horizons, you keep optimizing your portfolio. Yeah? So the strongest case for how banks respond to these opportunities will be start with use cases that lend themselves to fast paybacks, but do not take your eyes away from sets that will certainly start revolutionizing and make sure that the bank is able to meet the expectation of customers. Yeah? The customers would want to talk to their phones and ask for the best possible portfolio for their wealth. And the phone will reply back. The phone needs to then talk to your systems and your algorithms to say that the bank also supports the fact, so when Siri tells you that sell these funds today and buy these, it has IDFC Bank's endorsement saying that, yeah, we agree with Siri because we told her. And it would move. So that, to get to that era, my sense is a series of investments over a sustained time period will have to be done. Now, some banks will attempt to do all of this on their own, saying the regulators telling us or CFOs telling us, and we need to do that. At IDFC, what we're trying to do is actually get this concept of radical partnering. So we're working with folks, like-minded folks, who will share risk and reward. And it's a spectrum of what is immediate and what is a little further out. And we're investing with them. We're building very deep strategic partnerships. We're investing in technologies together. We're investing in marketing efforts together. And over the next 2 to 3 months, we do hope to make a lot of these public, of to how we are actually working with partners outside the banking periphery. And the whole concept there is, there are 3 banks. So you have an analog bank, feet on street, branches, queues in front of the ATM. Yeah, that's very real these days, right? There is a digital bank. So you got your IMPS, RTGS, your browser, your app. There's a third bank that is emerging, and these 3 technologies accelerated, which is what we call bank as a platform, BAP. रिश्ते में हम सबके बाप लगते हैं. Where we're saying that the banks lend their risk management and their balance sheet, and the fintech partners or other collaborators actually attract customers. They use venture capital money to do experiments at scale. Some of them will fail very fast. Some of them will be humongously successful. And banks will then partner in a risk-reward continuum there. Yeah. So this concept of radical partnering is where a lot of effort is actually going on.
Right. Very, very helpful, Abhay, to think about the range of models we need to think about to really participate in the technology tsunami that you spoke about. Deepak, if you think about these 3 models, right? There's the analog bank, and then there is a digital bank, and there is BAP or Shehenshah. At Kotak, this is really interesting. You have an analog bank because you have Vaisya, and one would argue that there are more conventional than the new gen banks. And then there is Kotak, which is like out and out new gen bank, and maybe straddling somewhere between digital and BAP, and you're first on digital on many things, Twitter banking and so on and so forth. Can you shed some light on, as these technologies of replacing humans with bots and underwriters with algos and LC issuers with blockchains and bitcoins and tokens, what's the human implication of all this? What does it mean to the human DNA? Is this going to get adopted? Where does the rubber hit the road? How do you think about some of these issues?
So I think access to technology is there for everyone. So technology, I don't think, is a great differentiator. Clearly, the challenge is one, obviously, on the people and culture side of any organization, because finally, people who are implementing these technology are human beings. Right? And the second is how do you execute and choose what not to do. I think we are often tempted to go in multi-direction. Every day we want to find, should we do this, should we do that, and there are hundreds of choices we have to make. So I think as a bank with real customers, business, and having done that successfully over a period of time, it's more about making the existing setup far more efficient. And I think one common matrix that everybody in the bank understands pretty well is your cost to income ratio. And 2 of the biggest costs that we all see is people and premises, which eats into a large part of our cost structure. And the second is on the compliance and risk. So when I look at each of these technology, I think what we are doing is we are using underlying technology to say what is the revenue benefit or what is the cost impact it creates. And moment I say compliance risk, obviously operations also is a large component of the cost. So the way we started implementing and saw the benefit was, A, we could do probably the credit resource used to do, say, an X of credit decisioning through the manual process. Moment we used a lot of this to automate, in 7 months post-launch, I think the productivity went up by 130%. And that is the real impact we have derived. That means that it's not that we have reduced the number of people who were in the risk, credit, or underwriting, but eventually by integrating the ING that you asked me, we could optimize and we could grow the entire book without adding necessarily the resources. Similarly, when we look at this entire ops and the transaction leg, by bringing in robotic process automation, we picked up a large part of processes where we realized that it had multiple handoffs. And by removing those layers, we could straight away reduce the processing time or transaction time for a lot of customer requests from 4 to 7 days to less than a day. In some cases, even real time. And by doing that, we could reduce large part of our operation workforce in those areas anywhere between 18 to 30%. So these resources obviously could be deployed because moment you look at resources, you again have the premises requirement to house these people. You don't need, when you do a RPA, people running in shifts. So you pretty much can run a 24/7 shop. You can get human to do more intelligent work rather than the very basic rudimentary stuff. So I think it's bringing in change in the quality of work. It's bringing in change in the mindset of resources. At the same time, I think it's important for organizations to communicate properly to their employees that some of these technology is not necessarily there to eliminate jobs, but it's there to make human far more efficient, do a lot much more, because at the end of it, everyone has aspiration to move up in life. And I think this is where the basic rudimentary day in, day out work can definitely be done either through the robotic process automation or building. Similarly, when we looked at the chatbot use case, now we realized as a bank with 40,000 employees, there were a lot of daily queries that employees had with HR on leave policy, on car policy, on hundreds of queries, and HR team just couldn't scale up the HR ops team to keep managing these queries, and the response time in some cases were 3 to 4 days, depending on the queue, number of times the communication had to go to and fro. By bringing in the automated chatbot, the basic queries for which you have a templated response could be given then and there. So I think it not just brought in the resource efficiency, but also brought in the employee satisfaction. So I think the technology and the value that it creates is there for real. And that's where we are isolating between what probably seems to be a fad. And when I call fad, it's with no offense to what this technology can lead in future, but what it can deliver now. And if we can derive that value, either in terms of cost or saving, I think that also gives organization confidence that these technologies can deliver a solution to real problem. And the value that you save, you can reinvest back by deploying into more of such real experience. So I think that's where we are bringing in far more balance and sanity between what are the real problems versus what's little ahead in the future.
Yeah, I think that's really great, Deepak. And I also want to do a time check. I realize that we are sitting between you and lunch, and that's never a great place to be. But Sridhar, one reaction from you on a very specific point, and then we may have a time for maybe just a couple of questions from the audience as well. The question, Sridhar, is that all of this also requires you to engage with the ecosystem, because everything is not going to be built here. And I know that Citi did recently a sort of hackathon, marathon around mobile, and you got a lot of different ideas. But what is your submission around the best way to engage with the ecosystem on making this happen?
No, I think the best way is to get the various partners aligned to this, and which is why we think that working with fintech is not competition. There are certain advantages and benefits that the fintechs have, being in terms of being at the cutting edge of technology, being very nimble, having a very low cost base, and these things are something which is very valuable for the bank. At the same time, the banks have some big advantages as well. The banks have a big brand, they're based on trust, they've been doing customer underwriting for years and millions of years, and they also have an understanding of how to deal with regulations, which the fintech companies don't have. So there is a real good mix and match possibility available if banks and fintech companies were to collaborate. And that's already happening. Like you mentioned, we had the Citi Mobile Challenge last year, where we invited almost 1,500 fintech companies to come, and we opened up mock APIs, and they developed programs on them, which were used for payments, predominantly on payments. And we are now taking one of those solutions commercially live in the next couple of months. Now we've actually opened up in our Asia unit, we've actually opened up APIs, genuine APIs. And last week, 50 APIs have been opened up, and fintech companies are working on that. And I'm sure this will be the way that things will move forward, because collaboration is very much required. And in fact, by definition, blockchain talks about collaboration. It says a network, which means that many companies or many organizations and many stakeholders have to come together to make this blockchain piece work. So which is why I find it a bit amusing that blockchain POCs are being done by individual banks, which by definition is against the construct, because the construct says that it has to be a network. So what these POCs will demonstrate is that the technology works well, and if there are changes to be made on the technology. But if blockchain indeed needs to take off, then it must have the blessings and the support of industry bodies or government. Like we had somebody before the panel talk about how in the UAE, the government has mandated that records will now get stored via blockchain. So these sort of regulatory support will really help take these technologies up forward.
Yeah, thanks a lot, Sridhar. I think we have time for a couple of questions if the audience has for the forum. Questions, thoughts, reactions? There's one right at the end. Is there a mic? Yeah.
Question for the bankers. Like we saw in a lot of modern technology, for example, say Uber or say Amazon, Alibaba. Do you really see something coming out of the blue, something which you have not seen in your rearview mirror, and taking a substantial part of, say, one of your businesses, like following the 80-20 rule? Let's say the trade business is very, very lucrative for all bankers. I'm one myself. Do you really see something coming out of the blue and just knocking us off when you're worrying about regulations, worrying about getting approval in India, in China, something, just something out of the blue coming in and just taking away that small business which will cost us half our head office?
Yeah, you want to take a crack? Yeah, I would think two industries that are going to get disrupted faster than others would be insurance and payments. I think they are ripe for massive amount of disruption. Yeah, insurance more because they underwrite risk, and there is a little bit of an asymmetry on what the customer knows and what the bank knows, or what the underwriter knows. At the insurance end. So there's going to be a massive disruption, especially in health and GI. And on the payments front, this whole demonetization is showing us, one is the appetite of the customers to actually just ramp up and adopt the digital sets. With payments getting disrupted, for those of us who are bankers here, there's a lot of implications on how float gets disrupted as well. Yeah. So therefore, two profit pools, one is on the distribution of insurance and one is on payments. I think that's coming fast and furious. I would give 6 months to a year for those kind of disruptions to happen. But some of the stuff like FX and trade,